Here's a summary of Uber's Q2 2025 earnings call, focusing on key financial metrics, management forecasts, risks, highlights, lowlights, and important statements from the CEO and CFO. Overall performance. Uber delivered a strong Q2 2025, achieving record highs in audience and frequency, which translated into robust growth in trips and gross bookings, both up 18%. The company also saw new highs in adjusted EBITDA, GAAP operating income, and free cash flow. CEO's key statements. Dara Khosrowshahi's strong performance and future outlook. Dara highlighted the record-breaking quarter and expressed confidence in continued strong performance in Q3, forecasting high-teen gross bookings growth and low to mid-30s EBITDA growth. Platform strategy and cross-engagement. He emphasized the significant opportunity in cross-platform engagement, noting that less than 1 in 5 consumers use both mobility and delivery. The appointment of Andrew McDonald as COO to supercharge the platform strategy is a key initiative. Autonomous vehicles, AV, momentum. Dara expressed excitement about AV progress, citing expansions in Austin and Abu Dhabi, and new partnerships with Baidu, Lucid, Nuro, and Wave. He stated that AV deployments will ramp significantly in the coming quarters. Shareholder value creation. He announced a new $20 billion share repurchase authorization, underscoring a sustained focus on returning capital to shareholders. Addressing consumer pricing. Dara explained that while consumers are sensitive to procession pricing, they show a delayed positive reaction to price decreases, leading to increased app usage over time. This is a result of passing on insurance savings to consumers. AV partnerships and investment. Regarding partnerships like Nuro and Lucid, he clarified that Uber is investing in software and hardware players to bolster AV supply, viewing this as a critical component for platform improvement. He stated that Uber can afford to invest aggressively in AV while returning capital to shareholders. CFO's key statements. Prashant Mahendra-Rajah buyback program. Prashant provided details on the new $20 billion share repurchase authorization, which is in addition to the remaining $3 billion from the previous authorization, bringing the total to $23 billion. He indicated that Uber will allocate around 50% of its free cash flow to buybacks annually, and expects to continue reducing share count. Capital allocation and AV investments. He reiterated that returning cash to shareholders remains the top priority. Investments in AVs are viewed as a way to build learning bases and gather data to engage credibly with financing partners. While AVs are not currently profitable, Uber has a proven model for achieving profitability in new ventures. OEM partnership scale. While not providing specific dollar amounts for OEM vehicle commitments, Prashant indicated that investments would be modest relative to capital returns, with proceeds from minority stakes being recycled to fund equity investments in AV players. He mentioned the potential for hundreds or thousands of vehicles per partnership. Key financial metrics and highlights. Revenue/gross bookings, up 18% for both trips and gross bookings. Adjusted EBITDA, reached a new all-time high. GAAP operating income, reached a new all-time high. Free cash flow, reached a new all-time high. Audience growth, strong growth of 15%, with efforts to attract new demographics through products like Moto and premium offerings. Uber One membership grew 60% to 36 million members, with members spending 3x more. The introduction of Surge Savings is expected to further drive mobility member growth. AV utilization. Waymo vehicles in operation are performing exceptionally well, with average daily completed trips in the 99th percentile compared to 99% of Uber's drivers. Forecasts for future quarters. Q3 2025. Expecting high-teen gross bookings growth and low to mid-30s EBITDA growth. Significant risk factors. Execution of platform strategy. While confident, The CEO acknowledged the difficulty in executing cross-platform promotions without negatively impacting the user experience of individual apps. AV commercialization timeline and costs. AVs are not yet profitable, and significant investment is required for hardware, software, and scaling operations. The capital intensity of AVs and the need for financing partnerships are ongoing considerations. Competition in AV space. While Uber believes it has a strong position as a third-party platform, the AV market is evolving with various approaches and players, including Tesla's expansion. Consumer sensitivity to pricing. While positive long-term reactions are observed, short-term price sensitivity remains a factor. Lowlights. AV profitability. Currently, AVs are not profitable, representing an ongoing investment area. Uber One optimization for mobility. While strong for delivery, optimizing Uber One for mobility consumers is still a focus and early in its development. In summary, Uber is experiencing robust growth driven by increased user engagement across its platform. The company is making significant strides in its autonomous vehicle initiatives, expanding partnerships and deployments. A substantial share repurchase program highlights management's confidence in future cash flow generation and commitment to shareholder value. Key to future success will be the effective execution of its cross-platform strategy and the continued development and scaling of its AV ecosystem.